So friends, in this video we shall discuss liberalized remittance scheme 2020. How much fund a resident Indian can remit abroad for medical treatment or for any promotion of his business or any other miscellaneous examples, and what all he is prohibited, what all he is not prohibited, we'll discuss here, right? So this is again a latest update on LRS scheme 2020. How much we can give to NRI we'll discuss here. The liberalized remittance scheme legal framework for administration of foreign exchange transaction in India is provided by Foreign Exchange Management Act 1999. So this is how came into effect from 2000. All transactions involving foreign exchange have been classified either as capital account or current account transactions. All transactions undertaken by a resident that do not alter his or her assets or liabilities, including contingent liabilities, outside India are called current account transactions, right? So current account which do not deal with any real estate, any purchase of any property or anything, right? In terms of section 5 of FEMA, persons resident in India are free to buy or sell foreign exchange for any current account transactions, except for those which have been prohibited by central government, such as remittance of lottery winning, remittance of income from racing, riding, horse riding, hobby, payment of commission on export under rupees state credit, except 10% is allowed. Beyond that, it is not allowed. Payment of commission on export and made towards equity investment in joint ventures, wholly owned subsidiaries abroad, Indian companies, remittance of interest, income on funds held in NRE and non-resident special rupee account schemes, payment related to callback services of telephones, right? This is prohibited. So what is liberalized LRS scheme of US 250,000? Earlier it was 25,000, which has been increased to 250,000 US dollars per financial year. That is from April to March, right? So we shall discuss only individuals can remit funds. This scheme is not available to all the corporates, companies, accounts, partnership, LLPs, OPCs, HUFs, trusts. So entities, they cannot avail this facility. Only individuals, including minors, they can avail this, right? So what are the prohibited? More or less like lottery system, horse racing, everything, right? Sweepstakes, lottery tickets, prescribed magazines are prohibited. Remittance from India for margin or margin calls, for purchase of foreign currency convertible bonds issued by Indian companies in overseas secondary market. We cannot remit funds for buying those. FCCBs are foreign currency convertible bonds. Remittances for trading in foreign exchange abroad. Capital account remittances directly, indirectly to countries identified. FATF, Financial Action Task Force. That is again the central, you can say the world largest anti-money laundering authority. The countries which are non-cooperative or blacklisted, we cannot send funds there. Remittances directly, indirectly, those individuals, entities identify as posing a significant risk of committing act of terrorism. So those are prohibited, right? So what is the purpose under FAME-CAT Amendment Rules 2015, under which resident individuals can avail of foreign exchange facility? Indian individuals can avail a foreign exchange facility for following purposes within LRS limit of rupees US dollars 250,000 per financial year basis. Private visits to any country except Nepal and Bhutan. Gift or donation, going abroad for employment, emigration, maintenance of close relative abroad, travel for business, attending a conference, specialized training or meeting, expenses for meeting, medical expenses, checkup abroad, accompanying as attendant to a patient going abroad for medical treatment checkup, expenses in connection with medical treatment abroad, studies abroad, that comes under LRS, any other current account transactions which is not covered under the definition of current account in FEMA. Authorized dealers may undertake the remittance transaction without RBI permission for all residual current accounts transactions which are not prohibited, right? So where RBI permission is not required, which are not prohibited as per RBI guidelines, right? Under LRS, resident individuals are required to repatriate accrued interest dividends on deposits investments abroad over above the principal amount. No, the investor can retain and invest the income earned from portfolio investment made under the scheme. However, a resident individual who has made overseas direct investment in equity shares, compulsory or convertible preferential shares of a joint venture or wholly owned subsidiary within the LRS scheme, he shall have to comply with the terms and conditions prescribed in the FEMA, right? So he is required to repatriate? No, he is not required to repatriate. Under LRS, any resident individuals required to repatriate the accrued interest or dividend on deposits and investment abroad, right? Can remittance under LRS facility be consolidated in respect of family members? Remittances under facility can be consolidated in respect of close family members subject to individual family members complying with the terms and conditions of the scheme. However, clubbing is not permitted by other family members for capital account transactions such as opening a bank account or investment purchase of property if they are not the co-owners, co-partners of the investment property overseas bank account. Further, a resident Indian cannot give to another resident in foreign currency for credit of letters foreign exchange currency account held in abroad, LRS, right? If the authorized dealer is required to check permissibility of remittances based on nature of transactions allowed same based on remittances declaration. Authorized dealer will be guided by the nature of transactions as declared by the remitter in Form A2, right? Is it mandatory to resident individuals to have permanent account number? Yes, it is mandatory. Is there any restrictions on frequency of the remittances? There are no restrictions on the frequency of remittances. However, the total amount should not exceed $250,000 per financial year. Once a remittance is made on account of $50 during financial year, a resident individual would not be eligible to make any further remittances under the scheme, even if the proceeds of the investment have been brought back into country. So even if the investment has been brought back, he cannot make further remittances abroad. Resident individuals but not permanently resident in India can remit up to net salary or after deduction of taxes. However, if he has exhausted the limit of 2 lakh net salary remittances and desires to remit any other income in LRS, is it permissible to limit over and above? Resident individuals but not permanently resident in India who have remitted their entire earnings and salary wish to further remit other income may approach RBI with documents through their authorized dealers bank for consideration. So RBI permission is required, right? Applicants should have maintained the bank account with the bank for a minimum period of 1 year prior to remittance for capital account transactions. Whether this restriction applies to current account transactions? No. The rationale is that remittances facility up to the LRS of rupees $250,000 for current account transaction under Schedule 3 of FEM-CAT amendment rules such as private business visits which can be provided by FEM. The FMC cannot maintain accounts of remittances as proviso has been confined to capital account transactions. However, FMCs are required to ensure that no KYC guidelines and anti-money laundering rules are in force. Are there any restrictions remittance to Mauritius and Pakistan for permissible current account transactions? No, there is no restrictions towards remittance for current account transactions to Mauritius or Pakistan. Remittances directly and indirectly to countries identified FATF as non-cooperative, of course, are prohibited, right? The individual have to designate a branch to authorize through which the capital account remittances under the scheme will be made. Applicants should have maintained the bank account with the bank for a minimum period of 1 year prior to the remittances. For remittances pertaining to permissible current account transactions, if the applicant is seeking to make remittance to a new customer of the bank, authorized dealers should carry out the due diligence on the opening operations maintenance of the account. Further, ADs should obtain bank statement for the previous 1 year applicant to satisfying themselves regarding source of funds. If such a bank statement is not available, copies of latest income tax assessment order refund filed by the applicant may be obtained. He has to further furnish Form A2 regarding purpose of remittances. Can remittances be made only in US dollars? Remittances can be made in any freely convertible foreign currencies. Are intermediaries expected to seek special approval for making overseas investment available to clients? Banks, including those not having operational presence in India, are required to obtain prior approval from RBI for soliciting deposits from their foreign overseas branches or for acting as agents for overseas mutual funds. Is there any restrictions on the kind quality of debt equity instruments individual can invest? No. Whether credit facility in Indian rupees or foreign currency can be extended to ADs banks to resident individuals, LRS does not envisage extension of fund non-fund based facility by authorized dealers to their resident individuals customers to facilitate remittances of capital account transactions under LRS, right? So no loans can be given for LRS. However, ADs bank may extend fund non-fund based facility to resident Indians to facilitate current account remittances, not for capital account but current account they are allowed. Can bank open foreign currency accounts in India for residents under LRS? No. Bankers cannot open foreign currency accounts in India for residents under LRS, right? Foreign currency, it is not allowed. Can an offshore banking unit in India be treated on par with branches bank in India for purpose of opening foreign accounts? No. Offshore banking unit? No. What are the documents required? PAN number is required, right? CA 15, CB 15, CA 15, CB, these are required as per guidelines. You can see that there. Will the expenses incurred by LLP to sponsor education expenses of its partners who are pursuing higher studies in benefit of LLP will be outside the LRS limit? LLP is a body corporate and has a legal entity separate from its partners. Therefore, if the LLP incurs or sponsors the education of the partners who are pursuing higher studies for the benefit of LLP, then the same shall be outside the LRS scheme, right? Sole proprietors, in case of sole proprietorship business, there is no legal distinction between the owner and the individual. So, up to permission limit under LRS, if the sole proprietor firm intends to remit the money under LRS for debiting his current account, then the eligibility of the proprietor in his individual capacity has to be reckoned. If the individual in his own capacity remits $250,000 in financial year under LRS, he cannot remit another 2 lakh in the capacity of owner of the sole proprietorship. So either as an individual or as a proprietor, he can remit funds up to 2,50,000 per financial year. What are the facilities under Schedule 3 of M? Following facilities: donation of up to 1% of the foreign exchange earnings during previous 3 financial years to persons outside other than individuals. So donation up to 1% of the foreign exchange earnings to the previous year, contribution to funds promoted by education institutions, commission per transaction to agents abroad, remittance up to US dollars up to 10 lakh, US remittance up to US 1 crore US dollars for per project for any consultation services in respect of infrastructure projects. Again, 10 lakhs US dollars per project for any other consultancy services procured from outside India. So they can remit funds. Remittance up to 5% of investment brought into in India, right? Or US 1 lakh dollars, whichever is less. So these are allowed to entities. Remittance up to rupees 2,50,000 per financial purpose of stipulated under Para 1 of Schedule 3. However, all resident current account transactions undertaken by such entities are otherwise permissible without any specified limit. Anything except above limits is prior approval of RBI is required. Can a resident individual make a rupee loan to an NRI, a PIO, who is close relative of a resident individual by a crossed check or electronic transfer? A resident individual is permitted to make a rupee loan to an NRI PIO who is close relative by way of cross-check electronic transfer subject to following conditions. Loan is free of interest. Minimum maturity is 1 year. Loan amount should be within the overall LRS of rupees 2,50,000 US dollars per financial year. It could be responsibility of the lender to ensure that amount is within the limit of that. The loan shall be utilized for meeting of borrower's personal requirements or for his own business purposes in India. The loan shall not be utilized either singly in association with other persons, right? So, for any of the activities in investment by person resident outside India is prohibited, namely under business of chit fund, nidhi company, agriculture, plantation activities, real estate business, construction of farmhouses, trading in transferable development rights, TDRs, right? The above real estate business shall not include development of townships, construction of residential, commercial premises, roads or bridges. The loan amount should be credited to NRO account of the NRI PIO. Credit of such loan account may be treated as eligible credit to NRO account. Loan shall not be remitted outside India. Repayment of loan should be made by way of inward remittances through normal banking channels only, right? Or to the debit of NRO or NRE account, yeah, FCNR also. Such loans can be adjusted here. Can a resident individual make a rupee gift to NRI or PIO who is close relative? A resident individual can make a rupee gift to NRI PIO who is a close relative by way of cross checks. The amount should be credited to NRO account of the NRI PIO. Credit to such gift amount may be treated as eligible credit to NRO accounts. Gift amount would be within the overall limit of $250,000 per financial year. It would be the responsibility of the resident donor to ensure that gift amount does not exceed the limit under LRS. So hope we discussed a lot of points under LRS. There are a lot of points which are not known to the bankers, which a resident Indian can remit abroad. So if we are dealing with the NRIs and their resident parents, and we can guide them, they can give loan to NRIs for purchasing any property in India, and which can be adjusted from remittances from abroad. So a lot of points were covered here. I think this was a very interesting topic. Most of you may not be aware of this, so I thought I'll cover it up here. Hope you are liking the video, enjoying the journey through my websites. Any feedback, suggestions, any clarification, doubts, please connect with me. I'll be happy to connect with you all. Thank you.